Good morning, everyone. Such a pleasure to be here to kick off the MoneyConf session at Web Summit with Mr. Frédéric Oudéa of Société Générale. I'm Edward Robinson. I'm a senior writer with Bloomberg News, and I've been covering fintech for a few years out of London now. And today we're going to talk about open banking in Bloom. Now, open banking, it sounds like something seasonal, or it's like something that just kind of happened organically. But open banking is more than just a marketplace phenomenon. It's actually, in the European Union, it's a new regime that's come into place that's backed by the force of law, backed by regulation, and it's also backed by standardization. So all of the fintech apps that are on our phones and we use to manage our money now in tandem with our banks, all of that is going to be reinforced through something called open banking. Now, the lifeblood of this brave new world is data. And data is something that banks kind of collected passively for a long, long time, but increasingly, financial data about your transactions, about how you manage your money, has become a strategic asset. And I'd like to begin our conversation with Mr. Oudéa by talking about this change. How is data becoming a strategic asset, and how does a bank like Société Générale take advantage of this?
First of all, let me say good morning to all of you, and I'm delighted to be here talking about these evolutions. Just one word on Société Générale, because it's always very important when we talk about open banking. It's to understand that we deal with very different activities, very different clients. As you might know, we are a bank in France, developed countries, developed networks with branches, but we are also, for example, doing banking in Africa. Africa, it's totally different. Less penetration of banking services, more need to have precisely financial inclusion. And we also deal, of course, with retail clients as well as corporates. We deal with financing products as well with corporate markets. I think it's very important to understand that, of course, the way to innovate is different from one market to the other, from one client base to the other, from one geography to the other, even if there are common themes. Now, to come to your point, as you've mentioned, the datas, probably the banks are the ones which have the most significant number of important datas on you as a client. The interaction, the depth of relationship we have with our clients is much more developed, for example, than the insurance activities, or for example, than the telecommunication companies. Much more. And just as an anecdote, because we are a little bit far from the industrialized usage of data, but I will always remember when I visited a branch something like 10 years ago, we had a person, a member of our staff, who explained to me was very good in dealing with clients. And who explained to me one day a woman came to see him and say, I have problems with my financing. I cannot feed my children. You need to help me. And he told me, well, I looked at his current account and I saw a spending in garments, clothes. And I was able to tell her, listen, if you choose to buy new dresses instead of feeding your children, there's a problem.
That is a problem.
So what I mean by this, the level of intimacy is, of course, by essence, very significant. But as you said, the revolution is that so far it has been used probably more on a non-organized and non-industrialized way, and it's very clear that we can, thanks to the new technology, now potentially use the data in a much more industrialized way, and not only to react, but of course to anticipate. What I'd like to say is that, of course, we all have in mind the ability to potentially better market products in a more personalized way by, again, identifying datas, behaviors, whatever, which can mean that in the next few days, someone might want to have a loan or buy a car or move because there's a baby which is to come. That's one thing which is, of course, obvious. I'd like to underline that there are other fields which are very important for banks and which should not be underestimated when we think about data. It's risk management, credit distribution, and it's also around compliance and fraud. Just to give you an example, in terms of tracking fraud, instead of having auditors looking through samples of files, you can do now with big data a full examination of all your consumer credit for a full year in a very short period of time, and then dedicate your efforts on tracking the anomalies. So clearly, the data management going forward is at the heart of any bank strategy. That's very true, of course, for, in particular, retail clients, but it can be also applicable, for example, on the wholesale or the markets.
I see. Well, you've sketched out quite a spectrum of different services, different capabilities that you need to bring to, let's call them data sets in different parts of the bank, from regulatory to the investment banking side to retail banking. But you're trying to implement these new approaches at a time when banking is in flux. It's branches are closing. You have a number of fintech startups that are coming up and trying to win over customers. You have machine learning bringing new capabilities. And big banks have a lot of legacy systems. There's a lot of old-fashioned, aging IT infrastructure in place, and you can't just rip all of that out. They have to be incorporated in some way. So share with us, if you can, how you're tackling this problem. I mean, why, when you look out at fintech startups, for example, to try and bring some innovation in, how will the legacy systems work with these newer offerings that the fintech startups are bringing? Is that a roadblock?
First of all, let me really highlight again that the nature of the adaptation varies very much from one activity to the other, one geography to the other. If I oversimplify, as you've mentioned, French retail, many branches, people have current accounts, very developed. A lot of changes, a lot of things, of course, to adapt because there's a new way of consuming banking services. People go less to branches. I guess you do a lot of things with your app. You are able to get your information. You can transfer money. You don't need to go to the bank to get cash because you have automatic tellers, etc. A lot of changes. As I've said, in Africa, for example, and I will explain to you how we adapt our business, in Africa, you don't have this legacy. It's more just about building. And then in wholesale, I would say it's also a little bit easier because you don't have branches. You have smaller group of people with also already a lot of IT involvement. So let's just go through briefly what we do. French retail, as you said, big change. The need to look at the future, and yes, there will be less branches because people do not need to go to branches in the same way. The processes will go towards more automation, so it will change also the organization of the back offices. But we have here a strategy, and we have a very good app, for example, with our French Société Générale network, to precisely develop the digital apps to bring services to the clients, and we can do that with fintech, precisely. It's a relatively small project. You know, cooperation works very well. Can I mention also that beyond the technology changes, a very important thing is the cultural changes, to be sure that all your staff understand that the future will not be like the past. From that perspective, we took a definite strategy, which is we have the leading online bank in France, which is called Boursorama, 1.2 million clients, the real full online bank, doing everything online. We've pushed it as quickly as possible. You know, the strategy to develop it as a way to stimulate competition, internal competition. Third element, which I would like just to add, to give you a few examples, we bought, for example, a fintech called Fiduceo, which was the #1 fintech in aggregation in France, you know, to look at different current accounts in different banks. Boursorama bought it, And we were able to deploy the technology not just in Boursorama, but also in our other networks. So the capacity also to share and take advantage of transversalities. Can I look at Africa? Very different again, let's not forget it. We are currently developing in Africa an electronic wallet for people who do not have banking accounts, but who wants to be able to get cash or deposit cash or make payments. We have been able to develop a technology thanks to a startup called TagPay. We put some money on the capital to help them to develop more quickly and of course to put more resources in Africa. We are currently implementing in countries with a network of partners like gas stations, retail networks, and it seems to work very well. What I mean by this, from that perspective, may I just conclude by saying, from my perspective, innovation, and that's where the banks have to change culturally, has to start from the clients. It's not a question of being product-driven. I think you need to start from the client. It means the innovation, in my view, needs to be done by the business. And we need to take advantage of the way to develop IT, which is very different, by bringing together business and IT people and being able to develop more quickly. Can I just, and I will conclude on that, myself, I have a role, I think, to play in terms of showing the example. I've been spending time in coding. I spent some time with my
coding.
That exactly,
Okay.
Python coding, because I spent some time with young engineers, 25-year-old, on the datas, and we created a very elementary bot, for example, with the capacity to also access API outside. It was a way for me just to understand and be sure that I was understanding the way to do it, to what extent coding is that complex, to understand whether we can train our IT people, and of course to participate to this evolution, which means bringing together IT and business people with much more agile development, and of course with the capacity then to cooperate with fintech.
Very good. In January, there's going to be a big change. There's going to be a European Union law, and we don't need to get into the technicalities of that law, but one of the effects of this law, which is called Payment Services Directive, is that it's really going to open the door not just for fintech startups, but for some heavyweights. Apple, Alipay, Amazon, Facebook, Google are all now going to have more wind in their sails when it comes to controlling the payment process and taking customers from the big banks. How big a competitive threat is that to Société Générale and other banks of that size?
First of all, let me say, it's fair to say, again, I look at the banking business with 3 different activities, and I look also at the different clients. The 3 different activities are the following: collecting deposits, collecting money and protecting this money, ensuring that you will be able to find your money the next day. Second, using this money to finance the economy, making loans. Third, providing services, current accounts, means of payments in particular. Second, let's not forget, again, we have an oversimplified 2 categories of clients: retail and corporate clients. It is very fair to say, as you've mentioned, that when you look at the retail services, it's a low barrier of entry business. You don't need to put a lot of money on the table to provide a service, and less with the new technology. You are also less regulated because the regulation is particularly significant for collecting deposits, because the regulators want to ensure that your money, the money of the people, will be there, and on the financing side, because behind the financing, of course, there's the question of the growth, and these 2 matters are very linked to political agenda. Payments is less significant. So yes, the competition on the payment side will be more significant, and in particular, as you mentioned, in Europe, with this new regulation, which is opening current accounts, if the client is happy with that, gives the authorization. And of course, behind that, it's not a question of revenues. For me, payments will be basically free. It's a question of conquering datas.
But are you concerned that Apple, Amazon, et cetera, will start to control the relationship with your customers?
There is, of course, potentially a risk of disintermediation. What I just would like to say, the payment arena will remain fragmented for quite a while. For the next at least a few years, I see actually many payment providers and a certain difficulty for the clients because they might have to use different apps depending on the shops or the online providers they want to access to.
So there's going to be kind of a battle going on for the next few years.
Exactly, that's what I think.
Yeah.
And still, let's not forget that in terms of payment, when you look at statistics, the payment which is developing the most is the credit card. Let's not forget it, in
Right.
millions of transactions. But yes, there will be perhaps new competitors, and yes, there is a risk of disintermediation. That's where we have to think about, again, what is very important in our added value with our retail clients. And can I say, in my view, what will be the most important in the relationship of banks going forward with clients is precisely the savings, the wealth management, even beyond payment. Regarding payments, we are of course innovating, but there's not a clear outcome of this battle.
So you don't see Apple, Amazon moving into the wealth management, the savings side?
I don't personally see them entering that easily
Right.
in the two core business, savings and financing, for two reasons. The level of regulation is much more significant, the level of scrutiny. And the question is, does it make, from that point of view, sense versus other activities? And may I say, and I'm here a little bit cynical, the level of profitability too is much lower. When you collect deposits in the regulatory framework of banks and you lend, you need to put a lot of capital at work.
That's right.
Because it's the safety of the system, which means low profitability. At least for the time being, I see for Apple, Google, etc., much more other activities to develop, which will be more profitable and less capital intensive.
But you're also saying then that they're going to be going after the most profitable part of the banking segment. That if the banks are left with the wealth management side, which you say isn't as profitable, that's not good news for the banks, right?
I still believe, and we will talk about this, when we think about providing being client-centric and thinking about the service, you are seeing the development of platform, and these large players, they certainly want to capture, if I may say, the clients in their ecosystem, in their environment, and of course try to collect as many data as possible to negotiate with providers, etc. I still believe that at least for some time, and in the coming years where security issues will become very important, where the safety of data will become very important, when you will see probably cyber criminality developing further, there is a role for banks which are able to adapt, which are agile enough, which are client-centric enough to provide in what I would call the wealth management space, a capacity to precisely help more the clients. What strikes me, in Europe, we will have aging populations. We have people who will live longer. We'll have overall probably public pension system which will reduce their benefits. The importance of managing savings and wealth is going to increase, in my view, going forward. And here, banks can do more and better, I think, with open banking, with more data, to help the people to understand and anticipate more. And at this stage, the level, it's fair to say this industry is probably providing limited added value versus what we can think about providing in 5 or 10 years' time. So I see, if you wish, positive development for banks, including with retail clients.
And in terms of fintech startups, do you need fintech startups to innovate these approaches that you're describing? Can you do it without them?
We need absolutely fintech, and may I say I've been following this evolution, and myself, as I've said, pushing in the last 3 to 4 years to change the culture, to open. We are doing a lot of things in terms of open innovation. We have transforming the way to develop. We have labs all across the world. It's true in Berlin, it's in London, it's in Africa, It's in Paris, of course. So the idea to interact, connect with this world of fintech. It's obvious that I've seen a change of mindset. 3 years ago, I think the idea was it's a pure competition. Fintech will be there to challenge banks. The way I see things evolving, we are in a much more cooperating mood. The fintech, which brings agility, which brings new technology, are able to help banks to speed up the process of change and transformation. And in particular, in connection with the client needs. And in particular, in domain which might not be exactly at the core of the banking, but a little bit aside. At the same time, what banks can help with the fintech is to provide scale and the capacity to immediately have access to contracts, to a client base, which will give credibility to this fintech, not only with one bank, but potentially with other banks. So I must say, I'm very much in the mood of cooperating. There are many examples, I've given you one or two, where we effectively develop either commercial agreements, proof of concept, or investing directly, if needed, in capital. We are putting money also in venture capital funds, 6 of them, to identify what would be of interest. Right. There are many ways of cooperating, but I see much more cooperation than competition, actually.
Very good. Well, you heard it here, ladies and gentlemen, all you entrepreneurs out there, bring your ideas to Mr. Oudéa. Thank you so much. Open Banking in Bloom session now ends.
Thank you. Thank you.
Thank you, Frederic.